These are the formats that we are using for a company account for our syllabus. First, we have to write the name of the company, statement of profit or loss, and other comprehensive income. For the year ending, you have to put the date. This is a summarized format. That is why we call it as a publication account. So under distribution, you can't show any expense. So that distribution expenses, you have to get this answer by doing a working separately. So here, when we do a publication account, you have to show a summarized format. So the format is like this. 2 columns, one column is for the note and the other column is for the value. Sales, cost of sales, then gross profit, other income. Whenever you are starting a sum, write this format and keep. Gross profit, other incomes, distribution expenses, administration expenses, other expenses, finance cost. Then this answer is a profit before tax. Then you write the word tax. Then the answer is profit for the year. Don't write here profit after tax. It should be profit for the year. Then other comprehensive income. Under that, you are writing the surpluses from the revaluation. Revaluation surplus, or there can be a change in revaluation. Then your answer is total comprehensive income. So whenever you take the question, write the format from top to bottom. Then you can put the values later. When it comes to this format, there's only one note, which is for the profit before tax. So that note we have to write as note number 1, profit before tax has been calculated after charging the following expenses to. What do you mean by this note? So all these expenses we write under workings as well. Either distribution, administration, other or finance. But we are taking selected ones for the note number 1. Those expenses are specifically for a company account. So those entries you have to put it into note number 1. When you write the note number 1, you are writing these entries, but you don't want to get the addition because we have already taken those balances as workings. Then, so as workings, we have to calculate how you got the cost of sales, opening inventory, purchases, closing inventory, get the simplified value to the format. So we transfer the cost of sales amount that you have to do this as a working, take that value to the format. Then from sales, when you subtract your cost of sales, you get the gross profit. Then other incomes, distribution, administration, other expenses, and finance cost, you have to do as workings. So under each and every category, you are writing all the entries relevant for that expense, and ultimate value only you can transfer into the format. So other incomes is a positive value, distribution, admin, other, finance, all are deductions. So we write with a bracket. Then from your gross profit, you are adding other income, subtracting all these expenses, you get the profit before tax. From that, you have to remove your tax. For the tax also, sometimes they say in the question, the tax is 1/3 of the profit before tax. That means from the profit before tax, you take 1/3 as a tax. Or sometimes they give an adjustment, the estimated income tax they give, you have to check whether there's an over or under provision last year. So if it is under provision, add it to the estimated amount and get the value. If it is over provision, subtract it. So ultimate value, you can put it into the tax. But most of the time in the questions, they will give you whatever the fraction, that means 1/3 or 1/4 from the profit before tax. So in that situation, you just whatever the amount that you got it as profit before tax, take 1/3, that is your tax amount. Profit before tax minus tax, you get the profit for the year. Then if there's any other comprehensive income, when it comes to other comprehensive income, you can write only the revaluation surpluses or the change in the revaluation reserve. So if there's a revaluation surplus, add it up. If there's a change in revaluation, subtract it. Then you get an ultimate answer that is called the total comprehensive income. Then we have to prepare statement of changes in equity. So again, you had to write the name of the company, statement of changes in equity for the year ending. So here I have given the format. Sometimes there's no general reserve in the sum. So you have to check in your question. If there's no general reserve, you don't want to open this column. So based on the question, try to adjust your statement of changes in equity columns. So these are the columns that you can get it for a format: ordinary share capital, revaluation reserve, general reserve, retained earning, and total. So always have the total column, that is the addition that you are getting horizontally. So here we write the balance as at, you have to put the opening date. These balances, mostly you can get it from your trial balance. So after entering it, take the total amount to the total column. Then these are the possible entries that you can get it for your format. Whenever you do a share issue or a rights issue, think of the double entry. The double entry is cash control debit, ordinary share capital credit. So ordinary share capital credit means the ordinary share capital amount will go up by that. So you are entering into the ordinary share capital. There is no cash involvement. There is no cash column here. So that is the ultimate value. You have to put it in the total. Next is the capitalization of retained earning. That is called, in general term, bonus issue of shares. But you can't write the word bonus issue of shares. You are writing the word capitalization of retained earning. When you capitalize a retained earning, there's a double entry: debit retained earning, credit ordinary share capital. Debit retained earning means from retained earning, you have to subtract that value. And ordinary share capital is here. So plus minus in the same line means there's no impact in your total column. So you are putting a dash. Then transfer to general reserve. Sometimes the directors decided to transfer some amount of money from the retained earning to the general reserve. So think of the double entry: retained earning debit, that means minus, general reserve credit. All these are equity. So the general reserve credit means you are adding to the balance. Then just like the same way, minus plus is in the same line, so there's no impact on the total. Next, dividends paid out of your profit. The company can pay a dividend, so the retained earning minus, total also minus. The same impact what you have put it onto ordinary, revaluation, general, and retained, you are entering into the total column. Then the total comprehensive income, when you are writing that entry, you have to think of the profit for the year, other comprehensive income, and the total comprehensive income. So that is the reason I have entered A, B, C. These are the three entries you are entering into the statement of changes in equity, but in a horizontal way. So you are writing the word total comprehensive income. The revaluation, other comprehensive part, you have to put it into the revaluation reserve. Profit for the year, you are entering under retained earning. Then the double line value, which is the total comprehensive income, you have to put it under total column. So you are getting these A, B, C values from your profit or loss statement, the last three entries. After entering everything, now remember I'm giving only the format. So in a question, if there's no share issue, capitalization or retained earning, don't write. So whatever the question that they have given, you have to adjust your format. Then you have to get the vertical additions of each and every column, including the total column. Then we are preparing a statement of financial position. So again, you have to write the name of the company, statement of financial position, asset. Here, two columns are right and one more column as a note. Non-current asset, the same way you have to write the format first, then you can include your amounts. Non-current assets, and this column is a note. Under that, you get the property, plant, and equipment. That is a big note, note number 2. Then right of use asset, number 3. What is the difference between property, plant, and equipment and the right of use? Property, plant, and equipment is the assets that are owned by you. But right of use asset means if you have taken anything on lease, that is right of use. You have the right to use it, but it is not owned by you. So that right of use asset, it's a note. We have to write it down separately. So the note number 3, right of use, here, asset I have taken as a motor vehicle. You can get the motor vehicle value minus accumulated depreciation. You get an answer. That answer you have to transfer to the format. Then there can be investment. Sometimes they are not giving investment. So you are putting into the last column. Under current assets, you write only these 4 entries in the format. Inventory, which is a closing inventory. Trade receivable, that is trade debtors, but don't write the word debtors. Here we use formal terms. Trade receivables, other receivables, and cash equivalent. So these are the entries that you can get it your format. You are putting other than the note column. This column I consider as first column. So you are entering everything to the first column, get the addition to the second, then add it with everything, you get the total assets. Now, usually you have the main notes are profit before tax, property, plant, and equipment, right of use asset. But in a question, if you have so many other receivable entries means prepayments and receivables together. So in this format, we don't write one by one prepaid, or receivable. So we take the total amount. If there are so many entries which you have to put it under other receivable, you better to open up a note. That note number is 4. So you can't by heart, these are the proper notes. Sometimes there can be only one prepayment. If there's only one prepayment, you are just writing here as other receivable, but there's no note. So remember these notes, you have to remember, when you are writing the notes, don't write notes for each and every entry. So if there are so many other receivable category, prepayments and receivables only, you are taking that value here. and you can mention number 4 as other receivable. But if there's only one prepayment, no need to have a note. Same way for here, cash and cash equivalent, if they have given the cash control balance and short-term investment, you better to have a note. But if they have given only the cash, no need to have a note separately. Then the latter part, we are writing equity. Under equity, we write stated ordinary share capital, reserves, revaluation reserve, general reserve, retained earning. These values you are taking from your statement of changes in equity, the closing balances. And when you add it up, this will be your total addition. The total column double line value is that amount. So these are called your posting these entries. The amounts that you got it from the statement of changes in equity, you post it to the statement of financial position. Then non-current liabilities, you can have debenture. Just put the value to the last column. Under current liabilities, you have trade payables. That is in simple term, trade creditors, but don't write the word creditors. Other payables, tax payable, debenture interest payable. For other payable, you can write all the accruals and received in advance value. So if there are so many accruals received in advance, provision for warranty, these things you can have a separate note, and when you have so many other payables, you better to write here number 5. So now when you're looking at this format, number 1, 2, 3, it's there. 4 is optional. If the 4 is not there, the other payable will be number 4. So don't put first all the numbers. First do your question, then think what are the notes that you can get it. For the property, plant and equipment note, it's a different note. So here I have taken the possible entries only. In a question, just like the previously I said, if there are no such entries, no need to write. So here I have taken land, buildings, motor vehicle, furniture, and total. Here also the same thing for the total column, get the horizontal additions. Cost, under cost, these are the possible entries that you can have it. In a question, if there's no addition, no need to write that entry. So the balance as at opening date, I have taken everything except for the furniture because I want to show you this addition. If there's an addition, if you have bought a non-current asset during that particular year, you can't take that value as the opening balance because when you start the business, that was not there. So you can't write anything as the opening balance. You are taking it as an addition. That means you have bought it during the year. That is the amount you are put into the total column. Then whenever you revalued it, now if it is a land revaluation, no problem at all because there's no accumulated depreciation. So you can have a revaluation deficit or surplus. It can be a minus or plus value. So the simple answer, you can get it as a balance as at closing. But whenever you revalue another non-current asset other than land, you have the depreciation also accumulated. So in that situation, you better to refer to the revaluation lesson, which I have already done it. So the building revaluation, you are entering to the revaluation column. Then you have to remove the accumulated depreciation. That is transfer of accumulated within bracket. Then only your value will be there. If there's any disposal, motor vehicle, I have taken disposal is a within bracket value. Ultimate answer is your closing balance. the furniture also. Then when you added up all closing balances, you get the total closing balance of the cost. Accumulated depreciation balance as at opening date. So except for the land, I have taken the balances. Depreciation for the year, every non-current asset, you can get the annual depreciation or the depreciation for the year. Depreciation on disposal, which you have disposed, there is a depreciation, you have to remove it, and then you can get the closing balance. Transfer of accumulated depreciation, again, you have to think of the revaluation reserve, not the reserve, revaluation lesson. Then you can see there is a deduction from the accumulated depreciation account. That amount you have to deduct it, get the ultimate value as a closing. Then you get the closing balances of the accumulated depreciation. The last entry is a carrying value, the difference between cost and accumulated depreciation. So you are writing the carrying value, here the land value, building cost minus accumulated depreciation, you get the carrying value. Motor vehicle cost minus accumulated, you get the carrying value. When you add it up horizontally, you get the total carrying value amount. So this is the amount that you are transferring to your statement of financial position as the property, plant, and equipment. Ultimate value. So here, remember, we don't write under property, plant, and equipment all the non-current assets, just like our sole proprietorship sum. So just summarized format is here.